Thanks for joining us. In today's WinWire, we'll be talking about Grove Street. So let's take a look at a quick overview. So the close of escrow for Grove Street was June 30th of this year. And a couple of the big opportunity highlights was this was a buy and hold investment opportunity that we were able to acquire with 100% financing. Additionally, it was a turnkey investment, meaning insert cash, out comes cash flow. There's a tenant in place with solid cash flow and good equity right out of the gate. The biggest growth factor for us on this deal is we raised all the money to buy the property in under 30 days. So how do we play to win? Well, it begins with the income statement. When we looked at the income and expenses on the property, we believed that the deal would have made for a nice wholesale payday, but you got to look at the long term. And in this case, between the strong cash flow and the equity position, the bigger picture made this a much more profitable deal than a one-time payday. Again, we also recognize the cash flow strength position here. It is something that we saw for single-family homes that rivals deals that were in the Phoenix marketplace 5 years ago in the 2011 timeframe. As a result of that, in our profit analysis overall, we said, well, hey, the numbers for this opportunity are positive enough that we can actually leverage private lending and pay a higher rate and get all cash financing, still have positive cash flow. That was big for us from the income and expense side of things. When we went over to the balance sheet to look at how did this make sense from an asset and liability standpoint, well, again, not only was the cash flow strong, but there was already a solid equity position. We were getting the property at a major discount off of after repair value based on recent comps. Once we knew that and the stars were aligned from all the key pieces of the income statement and the balance sheet, we were able to take action steps to quickly secure the private financing that we needed to do the deal. And given that the private financing that we acquired happened to be interest only as far as the payment format, while this is sometimes viewed as risky by some, we perceive that there was low risk associated with this particular financing option because of the property pro forma and the additional investor due diligence. We also identified alternate exit strategies and financing options to help us optimize our long-term gains. So let's play Stump the Skeptic. Two pieces to this puzzle here that were identified as potential risk points were leverage and tenant performance. So let's talk about those each for a minute. Question number one, isn't 100% financing risky? Well, as with all things in the investment world, proper education can reduce the risks associated. So in our particular scenario, we have extensive property management experience. We put together a scenario where we would have solid cash reserves, and the current tenant performance of the people living there now is rock solid. So that reduces the risk even further. So next natural question might be, well, if you have an interest-only loan, how do you ever pay back your creditors? Again, this property was acquired at approximately 75 cents on the dollar, so there's a solid discount there based on what properties are moving at currently. Based on that, the cash flow position and the debt financing that we have in place currently, basically the exit is to roll out of the interest-only loans by refinancing. That will pay back the original funding team and allow us to access the additional equity in the property for additional reinvestment purposes. Okay, let's pick on tenant performance. What if you inherit bad tenants? That might be a more valid question if you're buying an empty property, 100% financing, little cash reserves, and don't know what you're doing. But in this scenario, the current tenants have been in place for over 3 years. Their payment history is next to flawless. They just renewed their lease. They want to stay. Everything's all good in that department. So they've been good tenants. So the concern about bad tenants really isn't there in this scenario. Okay, well, the property's 30 miles away from where we live, so what if the tenants move out suddenly? How will we handle damages and finding new tenants? Well, again, we've been managing properties for some time now. We have a team of experienced personnel that we could leverage. We've got the resources to be able to assist in rare situations like these. People don't really just up and move in the middle of the night as a common thing anymore, and if they do, we know how to handle that. So, to go along with that, the rental market in this area is in very high demand. Rents are rising, and there's not a whole lot of places that are vacant right now. So it's a good position to be in from a supply and demand standpoint. So let's take a quick look at the project schedule. Since this was a pretty standard transaction, there wasn't any repairs that needed to be done to the property. The tenants were already in place and living there happily and paying rent on time every month. This was pretty straightforward. May 17th, the motivated seller was identified. Within the next couple of weeks, we were able to negotiate the basic terms of the deal and sent a purchase offer out on June 2nd. At that point, we were already starting to look at saying, do we take this down for ourselves or do we wholesale this deal? So we really started to dig into the numbers and see what made the most sense. Over the next few days, the property was actually placed under contract when we got the signature from the seller. Over the weekend, we made the final decision whether or not we were going to take down the deal and elected to do so. So now the fundraising began. Once the new week started, we were able to get everything set up for the financing, the insurance, the inspections, and any other due diligence, meeting with tenants, confirming the status of their leases and everything else that you would want to do prior to acquiring and taking title, final walkthrough, etc. Last but not least, celebration day, close of escrow, June 30th, 2016. So about 6 weeks to get the total deal done. And really, I guess the financing only took 20 days and not 30. But overall, we were able to move quick cash close, win-win for all parties, and we're excited about it. So what are the next steps? It's pretty straightforward. Nothing much changes for the tenant. The rents go to a new place than it did in prior months. We'll take some proactive steps to optimize the property condition, get some scheduled service maintenance requests just to make sure things continue to be operating well with the property. The next, we'll continue to align the rents with the local market as appropriate. Tenants don't tend to stay somewhere forever, but as we start to evaluate their lease and their performance come renewal time, there may be an opportunity to boost profits there, depending on what the next steps are for the tenant as well. So it seems at this point kind of a can't lose situation. We're buying right in the right area at the right time. So the stars are aligned there. Last but not least, we'll refinance the property in the next few years, access the additional equity in the home, pay off the original private money sources. So we'll keep those in good graces to be able to use again, and continue to successfully manage the property happily ever after. Just a handful of lessons that were learned here that are good to call out, and they go back to a lot of our basic premise when it comes to investing and having a strategy and knowing what you're doing. And number one, it's always be ready to take down a good deal if it meets your criteria. If you stay ready, you never have to get ready. And so when we backed into this and looked at it and say, hey, well, this is the perfect type of deal we would look to add to our portfolio. Why wouldn't we if we have the means to do so? That leads into number two. 100K is only a phone call away. We're able to secure funding for this deal in record timing. Why? Not because of us, but because of the deal. When a good deal arrives, the money will soon follow to support it. Third, good debt puts money in your pocket, so load up on it. Responsibly, of course. Number four, every deal will throw you a curveball, as this one did. We had miscommunication instances here and there where things maybe got lines crossed with the seller, and we weren't sure if they were mad or they didn't know if we still wanted to move forward with the deal, and there were unexpected liens and who's going to pay for that and how are we going to tackle this. But we were able to come to an agreeable win-win solution. So that worked out well, and that kind of preludes, that serves as the precursor to number five, where thinking win-win can make all the difference in the final negotiations. So we kept that at the front of our mind when we worked with the seller and negotiated the terms of the deal, and everything worked out well in the end for a successful close of escrow. So that's it for this WinWire, and hope to have many more to follow. Hope you like this. If there's questions you have about how we structured it and how we pulled it off, or anything else on topics like this or others, drop us a question, reach out, give us a comment. Talk to you soon. Thanks.